Hello friends, this is Vivek Bajaj. I am the co-founder of Elearnmarkets and StockEdge. Friends, you have been hearing from us. We have been creating consistently learning videos for our users for almost 2 years now. Thanks a lot for becoming part of this community called Elearnmarkets. We are trying our best to give you as much sensible information as possible to understand the nitty-gritties of financial markets. Friends, I am also owner of one of the largest proprietary trading desks in India. We contribute quite significantly into the exchange liquidity and exchange volume and depth. And because of that, we understand a lot of things which a normal retail investor doesn't understand. When I'm saying retail investor doesn't understand, I'm not trying to say that retail investor is the weaker person in the whole ecosystem. What I'm trying to say is that a professional who is a full-timer into the market will obviously have a better edge of understanding the market than a normal retail investor. Now in this video, I'm going to talk to you about 5 critical things which one should know if one has to succeed in trading. And these 5 are very unique things. Please do watch this video till the end, because I'm going to share with you some very insightful information about what really works in market and things which you should know if you want to get inside stock market and eventually make money from stock market. So let's get it going. So what's the first thing? First and the most important thing is price. Friends, stock market is all about trading the right price. If you are trading for a specific duration, you will have to make a judgment that whether that price which is traded at that moment is the right price or not. As a trader, you want to believe that the price will react to something. If the price will react on the upside, you would like to buy. If the price will react to the downside, you would like to sell. Now, to understand when will the price react, you have to understand this principle theory that price always reacts in a swing format. That means price will always behave like this. There will be downside, then the price will go up. There will be people who will believe that the price has risen too much, and there will be correction because those people who have bought at the lower level, they would like to square up the price. Now this understanding of swing, the principal hypothesis of market price movement, will help you to identify when a stock starts this swing or when the swing ends. And swing is a very relative term as well, depending upon the duration of the stock price movement. So if you're looking at the 5-minute price movement, you look at the 5-minute swing. If you want to look at the an hourly price movement, you look at the hourly swing. So the idea of a trader is to identify this origination point of the swing and the termination point of the swing. The origination price of the swing is where you buy, and the termination point of the swing is where you sell. Now, who originates this swing? Who terminates this swing? Not you and me. We are too small, too less capital people who are trying to participate in the market. The origination of the swing is done by bigger people, and similarly the termination of the swing happens when the bigger guys exit the stock. And that's where my point number 2 comes into the picture. The point number 2 is, and mark these words, that every stock, every underlying is managed by an operator. Now friends, I'm sure that you must have kind of made a judgment about me when I use the word operator, but do not consider the word operator in a negative connotation. When I talk about operator, what I'm trying to say is that every stock is controlled, every stock is managed by a person or a team of people, and they want that stock to behave in a particular way. And that operator could be the bigger guys, the institutions who own shares in that company, or the operator could be owner of the company who is participating in the market also through different ways and means. Now this is a hard fact of market which all of us have to accept, that every stock is managed by an operator, and as an investor or trader in the market, you don't want to be on the wrong side of the operator, isn't it? Now what do I mean by operator? In a very simple language, operator is someone who is managing that stock, not necessarily operating that stock. And the person could be a market maker who is bringing the bid and ask in the stock, or the person could be someone who is speculating that stock and who has created large positions in that stock. Now these people, the operators, who could be a big individual, who could be a big institution, these are the guys who have created certain position in the market in that stock, and they would like that stock to react based on their position. For an investor or a trader, it is very important for us to identify what the operator is doing. And the price movement along with certain data points will help you to make the best case assessment of what the operator is doing in the market. So what are the data points? Obviously the price is the most noble data point, which tells you that at this point there was enough buyers, as well as you have data points like volume, delivery, and certain derivatives data points like open interest, which will help you to understand someone has built position in that underlying and someone is trying to do something in that underlying. So for a trader, especially the people who are looking for a swing position, that means a sustainable position for a period of time, for a trader it is very important. The first question to be answered is, what is the operator doing? Because you want to be on the right side of the operator. The operator will originate a swing and will probably terminate the swing. It's near to impossible to make money from 0 to 100. But as an investor or an individual trader, if you enter at 40 and if you exit at 60, that's where you can make most of your money. Now the point number 3 is, this is also very important, that a stock never works independently. A stock, whenever there is any sustainable movement in that stock, the sector itself we see a lot of action. It will not be possible for a stock to do independent actions in the price if the sector is not witnessing some action. So it is important for all the traders to look at this sector rotation. That means what kind of money is flowing from which sector. If you master this art of identifying the sector rotation, it will become easier for you to identify stocks which could potentially move because the sector is moving. And mind you, my friends, the stocks which move without any action in the sector are the last stock you want to look at, because you never know when the momentum in that stock will end without your knowledge. So the best case scenario for individual traders is to look at the sector rotation and identify stocks which are participating in that sector rotation in the wisest manner. How do you do that? Well, we have designed Stockage app for precisely doing all these things. You can create your own watch list of multiple sectors and you can track the major analytics associated with that sector and see which sector is witnessing any kind of activity from the operators. Now again, the point number 2, every sector is also kind of managed by an operator, and the data points like volume, delivery and open interest will help you to understand what the operator is trying to do with that sector. Now the point number 4, which is again very critical, is which no one understands, and people who have lately been into the market for last 1 or 2 years, they have extreme ecstasy of participating in the market, and people don't understand that in market less is always more. So the lesser you participate in market, the higher is your probability of success in market. So when I'm talking about less is more, is less trades, try to get more income out of per trade, less stocks, try to get more income out of those stocks. So if you have this model that you want to trade every and any stock which you get information from various sources, it is a difficult proposition relatively, that you define your stocks that, okay, this is my number of stocks which I will use for the purpose of my trading. That's my way of trading, and I've been successfully doing that for almost 15 years now, that I've decided that these are the 10 stocks which I will trade in the market. Nothing else. My life is restricted to only those 10 stocks. So suggestion for people who have just entered the market, identify 5 stocks. That's it. Your life should be around those 5 stocks. You could probably do a mix of large cap, small cap and mid cap stocks in those 5, so that whenever there is action in those 5 stocks, you are always available to capitalize on that swing action. Remember point number 1. Now, how do you identify these 5 stocks? One simple way is that look around yourself, see what people are talking, and stick yourself to the stocks which are in discussion right now. The most logical way is that think about the industries which you understand. Think about the businesses which you understand. Think about the companies which is associated with your lifestyle. For example, you may have a bank account with certain bank. You may have a car of a certain company, or you may be using products of a particular company. Why don't you look at those companies and trade only in those companies for the time being? Because the most important philosophy of participating in the market, which is, do you understand the business of the company? If you understand the business of the company, that's the stock you would like to trade, because it would be easier for you to comprehend the price movement in those stocks. Now, the point number 5, which I want again to come across all of you very, very clearly, is that liquidity drives the genuine players in the market. Please do not trade in stocks which are illiquid in nature. You can safely presume that if a stock is illiquid, it is not largely owned. There are not enough shares in the market. The stock has been kind of cornered by a few people, and very, very likely that you may land up in the wrong side of the trade when you trade the illiquid stocks. So what we did in Stockage is we tried to figure out what are the major stocks in market and which are worth trading, and we realized there are 700 stocks, largely all the stocks which are there in one of the indices of the exchanges. These 700 or 750 stocks are the ones which are decently liquid, and one should only trade, if at all you are trading, and max these among these stocks. So if you look at Stockage filters, in the filters you will see we have given you that if you run any scan, you can actually limit your scan to only those 700 stocks, and you can restrict your trading activity on only those 700 stocks. So this is it, friends. I thought that a small video where I could share with you some critical points which typically we don't look at when we are participating in the market. I thought this video will help you so that you can become more sensible and more genuine participant in the market. So just a small recap about all these 5 points again. First, price will always behave in a swing. Try to locate that swing depending upon what duration of the trade you have. Second, every stock is managed by an operator, so try to be on the right side of the operator. Third, stock will always move in conjunction with this sector, and any stock which has no relationship with that sector movement, please try to avoid those stocks because you may land up on the wrong side of the trade. Fourth, less is more. Focus on less trade in less stocks, and you increase your chance of success in the market. And the fifth and the most important point is liquidity always drives the genuine players. Only trade in stocks which are liquid in nature, which are widely owned by people, because if it is cornered stock, you may land up on the wrong side of the trade. I hope you like this video. Thank you so much for our regular visitor and regular viewer. Do like our channel Elearnmarkets. I guess we are doing enough good work for you to get your attention. Make sure you like this video. You comment in this video. I will reply to your comments. Any query you have, I'll be more than willing to answer those queries. Do subscribe to this channel. There is a bell icon. Do click that bell icon so that whenever such kind of a video is getting released, you are well updated. Thank you so much for your time and attention. Hope to see you again in another video. Thank you.